All right. Ready to jump into probably one of the wildest stocks out there right now.
Let's do it. There's certainly a lot to talk about.
Yeah, today we're doing a deep dive on Circle Internet Group. That's CRCL, Digital Financial Infrastructure Play.
And specifically that IPO, right, which has been,
Yeah,
well, historic doesn't quite cover it.
exactly. So our mission here is really to unpack the technicals. We've seen this incredible surge, but, there's obviously huge risk alongside that opportunity. That's the core tension here.
Immense opportunity versus acute risk. Good way to put it.
Okay, so let's talk about that post-IPO action. CRCL priced at what, $31 back on June 5th?
Just $31.
And day one, it just exploded, like over 160% gain. And since then, it's climbed over 675% from that IPO price, touching almost $300 recently.
It's truly staggering.
And the thing that gets me is it hasn't had a single down week since it started trading. Not one.
That really establishes the trend, doesn't it? Just incredibly powerful, consistently bullish.
Yeah, it's like a momentum trader's absolute dream scenario. But I imagine it's giving risk managers a headache.
Oh, definitely.
Yeah.
Which brings us to a really crucial concept here.
Yeah.
The technical air pocket.
Okay, technical air pocket. Explain that for us.
Right. So imagine you're climbing way up high, right? But the nearest solid ground below you is miles away.
Okay.
That's sort of what's happening with CRCL on the chart. The stock price is so far above its key moving averages.
Like the 50-day.
Exactly. The 50-day simple moving average, for instance, is way, way lower. Still trying to catch up, probably around $150, maybe $151.
Wow. Okay. That's a huge gap from nearly $300.
It's a vast distance. And what that means is if selling pressure suddenly kicks in, there's just not much technical support nearby to slow it down. So any reversal, if it happens, could be incredibly fast and deep.
Right, a quick drop because there are no rungs on the ladder close by.
Precisely. That makes it a very high-risk situation if that momentum suddenly shifts direction.
So given that that extension, what are the key price levels traders should be watching? Like, where's the potential support or resistance?
Well, the immediate ceiling is pretty obvious. That all-time high is just under $300. That's your resistance.
Okay.
But maybe more important right now is the first major support level. That comes in around the prior high zone. Think roughly $240 up to maybe $248, $249.
Gotcha. So that old ceiling is now the new floor, potentially.
That's the idea. It's a critical pivot point. And interestingly, if you look at Fibonacci levels,
The fibs.
the 61.8% retracement level, which is a key one, lines up remarkably close to that 50-day moving average we mentioned, somewhere around $154 and $155.
Interesting alignment there. But what about Wall Street analysts? Where do their targets sit?
That's another point of caution. The average analyst target is currently around $235.
Wait, $235? That's well below where it's been trading recently.
Exactly. Significantly below the recent highs. So analysts haven't quite caught up, or maybe they're just more cautious given the run-up, something to keep in mind.
Definitely. Okay, so we have this huge run-up, these support resistance levels. What are the momentum indicators telling us? You mentioned overbought.
Yeah, deeply overbought. If you look at standard indicators like the RSI, the Relative Strength Index, it's way up there, around 84. The stochastic oscillator, too, around 85. Those are extreme readings, typically flashing warning signs.
But it keeps going up, so why?
That's the paradox, right?
Yeah.
This is where the ADX comes in the average directional index.
Okay.
CRCL's ADX is showing a reading over 56. That signals an extremely powerful trend is in place. It's like the classic signature of what traders call a parabolic melt-up.
A melt-up. So the underlying buying pressure is just overwhelming the overbought signals for now.
That seems to be the case. It suggests the momentum itself can keep the price elevated, even defying those technical warnings. And you see confirmation in the volume.
Right, the volume has been huge.
Massive. We're talking daily trading volumes frequently topping 90 million shares. Compare that to its more recent 30-day average, which is closer to maybe 48 million.
Wow. Okay, so big money is definitely involved here, confirming the move.
Yeah, conviction buying.
But what about the other side of the trade? Are people betting against this thing? Is there short interest?
Oh, absolutely. And that brings up the potential for a short squeeze.
Ah, okay. So lots of shorts.
We're seeing consistently high off-exchange short volume data, often fluctuating between, say, 45% and even up to 57%.
That's a pretty significant chunk betting against it.
It is. And the risk for them is, as the stock keeps climbing, They might be forced to buy back their shares to cover their losses.
Which just adds more buying pressure.
Exactly. It adds fuel to the fire, potentially pushing the price even higher. It's a classic squeeze dynamic.
And you have to mention the volatility here, right? The daily swings must be pretty wild.
Extremely volatile. The ATR, the average true range over 14 days, which kind of measures the typical daily price swing.
Yeah.
It's been bouncing between roughly $14 and sometimes over $33 per day.
Good grief. A $30 plus daily range. Managing risk in that environment sounds tough.
It makes traditional stop losses and risk management incredibly challenging, yeah. The ground shifts very quickly.
So it sounds like CRCL is really behaving unusually even compared to its peers.
That's another key point. It's acting like what we might call a momentum anomaly. It's massively outperformed similar companies like Coinbase, Coin9, and interestingly, it's even outperformed Bitcoin itself during periods when they were actually declining.
Huh. So it's sort of detached, running its own race.
It suggests there are company-specific factors, or maybe just pure momentum, driving its price far beyond the broader market or sector moves.
And that status probably attracts a certain kind of trader.
Absolutely. It becomes a magnet for momentum traders, which can lead to price movements that seem, disconnected from traditional fundamental valuation for quite a while.
Right. It's almost a psychological game at that point.
Very much so. The biggest risk sometimes is thinking, exactly when that intense momentum will finally break.
Okay, so pulling this all together, what are the immediate scenarios you see playing out for traders, for you listening?
Well, you've got a few clear possibilities right now.
Yeah.
Scenario 1. This bullish melt-up just continues. That would likely need a clean, decisive break above that $300 all-time high.
Right. Clear skies above.
Scenario 2. We get a pullback, maybe a healthier consolidation. That could offer a more, let's say, conservative entry point for some. Perhaps down towards that $240 support zone we talked about, or maybe even closer to $205 if it dips further.
A chance for it to catch its breath.
Exactly. And scenario 3, given how stretched it is, you always have to consider the potential for a sharp bearish reversal, a rapid unwind.
Always a possibility with these kinds of moves.
So, to kind of wrap it up for you, CRCL is undeniably locked in a very powerful uptrend, that's clear. But those deeply overbought conditions, the extreme distance from its moving averages, that means the risks are significant and they are escalating the higher it goes.
So the trend is your friend, but it's a risky friend right now.
A very risky but currently very strong friend. The immediate bias stays bullish as long as it holds above that key $240 pivot zone.
And a break above $300 signals more upside potential.
Correct. A definitive breakout there would likely signal continuation. But maybe the final thought to leave you with is this. What does this kind of extreme price action really tell us about market psychology when it's driven purely by intense momentum? And maybe more importantly, how do you think about navigating or even trading such a uniquely volatile, high-stakes situation like this?
A lot to think about there. Definitely a fascinating case study in market dynamics.